Hello and welcome to Capital Call, a special podcast series in which we talk to investors from across India's venture capital ecosystem to understand how they are navigating through the COVID-19 crisis. I'm your host, Supriya Roy, and today I'll be speaking to Srikrishna Ramamoorthy, a partner at Unitus Ventures, a Seattle and Bangalore-based seed stage and early stage fund focused on businesses in India that are innovating for the masses. So over the past 7 years, the fund has invested in about 30 early stage startups and over 30 more in other emerging markets across the globe via your global partners. So with early stage funding, Shri Krishna, what I understand is that there's a lot of diversity in the sense that, some are challenged in a COVID-19 situation, some are still growing and some are still, they just raised the fund.
Mm-hmm.
Obviously, we don't know when this will end, but I want to know, how do you manage risk in this kind of a situation from the VC eyes of seeing it?
Got it. Cool. No, thanks for having me, Supriya. Good to be chatting with you. It is a crazy time. One doesn't know, like you're saying, as to when all of this is going to end. At a very basic level, obviously, how much money does one have in the bank and how one's going to see through, assuming scenarios where there isn't any revenue to perhaps very little revenue coming in. What are ways in which you could be extending and surviving through this situation with the capital that one has. It's not necessarily a one-size-fits-all kind of approach. At a broad level, you put out these parameters on making sure that folks are focusing on cash and doing everything that it takes to see themselves through. As a firm, for ourselves and a fund, the thought process for us is looking at which are the companies that we would need to perhaps put additional capital into beyond what we've put in, and maybe end up doing that earlier than anticipated. So at a fund level, I think we are still in the middle of our investing period, so we are in a good position. We have capital and we have the ability to deploy that into both existing companies and new companies. I think what we're doing though is being a little more selective about the kind of new investments that we would want to make. Given the sectors that we focus on, which is predominantly fintech, jobtech, and healthcare, we've typically not invested in companies that are consumer facing or B2C that require large amounts of capital for, say, customer acquisition or marketing, etc.
At large, when one observes the kind of portfolio investment that you guys have, you strike this balance of sorts between profit making, which is the core of every business out there in the world. Also, with these impact focused investments, there's this balance that you guys strike. If all of your investments are not directly taking a toll in terms of the top line, but also you have investments that are indirectly dependent on a lot of other companies who are in the gig economy ecosystem. So
absolutely,
that also just goes on to play a role, I think.
No, you're absolutely right, Supriya. A number of our companies, particularly in the job tech space, are really working with informal workers, gig workers, and the blue collar segment. And that segment, so as a consequence, I think a number of companies in the portfolio have actually been directly impacted, not so much indirect. Take, for example, Avigna essentially provides opportunities to student gig workers and gets them to execute on physical tasks for large companies in India. Similarly, we have an investment in a company called DriveU, which is an on-demand driver service. Again, because of lockdown, nobody's stepping out, and so no one's asking for a driver. Both these companies have actually deployed their gig worker base onto essential service delivery and looking at other tasks, looking at tasks that folks could be doing from home, and that sort of things. Similarly impacted ends up being companies that are providing financial services to this segment. Again, loan repayments are getting impacted. Savings capital is coming down because people are not earning. So overall, yes, this is these are ways in which people are getting impacted. And I think it is going to take a while before some of this would see some semblance of stability. One hopes that post the lockdown getting lifted, you will see things change a little bit. But I think for a full recovery, it would. My sense is it'll probably take 12-18 months.
So with that thought, I'd like to know, what are the day-to-day operations like at your end, in the sense that how are you engaging with the portfolio investment, with the companies, also in order to really just solve their problems, if that's even possible in a situation of this.
I think primarily our role as an investor is to act as a sounding board for the entrepreneur. I think that's one area that we really can help, because it is stressful, and it helps to have someone that can just listen to you, and where we can help our being able to see if there's access to other sources of capital that we could be lining up for these companies, newer and different business development type of opportunities. So looking to see if something that they're thinking about is not working, or the existing line of business isn't working, could we be leveraging our networks to open doors and enable other sources of revenue to come in. Thinking through just on how does one do cost cuts, really acting as a sounding board and helping the entrepreneur think through. We're also using the time to connect with other investors to learn from what's the experience that they're having, and to see if there could be learnings that that they're seeing work well with their portfolio, and see if we could share that with with the entrepreneurs that we work with.
It's interesting because you bring up the topic about how there's a lot of conversations happening amongst investors themselves. So I'd imagine several of your own portfolio companies would also be in line for follow-on investments at this current, environment.
Yeah.
So at what extent do you expect the funding cycles to really just extend? Just trying to get a sense of what the conversations are like at the investor rooms in terms of designing the structuring follow-on rounds.
Yeah. So I think for a lot of the investors, there is still capital that's available that is waiting to be deployed. Most investors have taken a call over the past few weeks for saying, let's just first look at our own portfolio, focus on that, and make sure that there's enough there before we look at making new investments. But once you've done thinking through that, I think it's not that one can stop investing, right? I mean, you've got the capital's been raised, it's waiting to be deployed.
Sure.
So it's just a question of seeing this through and timing. Some of the sectors, and particularly the sectors that we're investing in, typically tend to be providing services or products that are at some level a must-have and not so much, don't necessarily fall into a nice-to-have kind of bucket for the customer.
In many ways, appeal to the masses.
Correct. And when you're building services or products for mass segments, one, you have to be, this customer is this consumer is very price conscious, and they're willing to pay for a product or service, but it has to be something that really solves a problem for them or really meets a need. So we continue to see that that's not necessarily going to change. It's not a discretionary spend, say basic education or something that earns you an income. These businesses should be able to recover in a reasonable amount of time, which will then enable access to follow-on funding to come through.
Otherwise, is it too early to be able to identify weak links in the portfolio, in the sense that the cash runways have significantly reduced for obvious reasons?
Yeah, that has happened, but I think nothing has surprised us in terms of, oh my gosh, this was actually fundamentally a flawed business to have invested in the first place. I don't think we're seeing any of that, thankfully. And I think that's not something that will really happen with us because of the type of investing that we are doing, where unless we're convinced about the robustness of the business model, we're not really going to invest.
At large, we're seeing a lot of inside rounds and bridge rounds taking place, right? That while it is encouraging the existing portfolio, I also understand that the valuation is taking a knockdown, a beating, and that is more and more becoming the norm. So how the company is really just coping up with these sort of conditions in place now?
We haven't yet seen situations where people are seeing a dramatic reduction in valuation yet. It's too early for that, is my sense.
At Unitus,
with us we have not seen it at all.
So shifting gears now, I'd also like to understand what kind of runway does Unitus currently have in terms of the cash that you guys are capable of deploying currently.
Sure. So we're currently investing from our second fund. It's a 300 crore fund. We're midway through that in terms of just the number of investments. Typically, we are putting in anywhere between $500,000 to $1 million, so 3.5 crore going up to 6.5 crore into new investments, and then reserving probably twice that into follow-ons. So we've really done only 12 new investments at this point. We've done around 3 follow-ons. My sense is we'll probably invest in another 7 or 8 companies. Also put money into follow-on rounds in most of those that are doing well.
This particular year, there was just one investment at Super Money, right?
Yeah, that was the one we closed. Yeah, that was last year.
The disclosure happened only in the month of February. Yeah,
right. Yeah.
Yeah. So what?
Other than that, we've got 2 other investments that are in progress right now.
Okay. Are you in the liberty to tell me what sectors they are in?
Sure. So both of these are in the jobtech space.
Oh, okay.
Yeah. So that's become a big area of focus for us in the second fund.
And what's the current view on the health tech sector, which you guys were previously, a lot of focus that you guys had invested in that
Right.
range
So
of
we continue to be opportunistic about healthcare. We are actually seeing that the companies in the portfolio currently in healthcare are actually seeing opportunities arise in the COVID situation. So one of our companies in the healthcare portfolio is a startup called 5C Network, which does teleradiology. So they're doing actually a lot of they're doing a lot of reads of the scans that are happening of COVID patients, for example, so chest X-rays, etc.
Right. To just wrap up the entire conversation, I'd like to know what is Unitus currently having in terms of the conversations with its own LPs, given the
Sure.
deliverables and targets for itself at this point.
Yeah. So we started to write to our LPs again, I think earlier towards the end of the month in March, and we'll probably do a regular communication till the situation gets better. And I think what we're really putting out is the fact that we're seeing a lot of resilience from our portfolio. We continue to believe that these companies will be able to see this through. So that's one. We're also making asks from our LPs for areas where we know some of our LPs could actually be able to help some of the portfolio companies and also might be interested maybe in even doing direct investments as well, wherever companies are going to be raising money. I think other topics that we've been talking to our LPs about is just, we've surveyed our own portfolio CEOs on sort of what are the macro issues that and operational aspects that they're seeing from the crisis. So what are we learning from that? Just giving our LPs a sense of how are we managing COVID risks for ourselves and what we see are mitigations and how are our own portfolio CEOs doing that. What's the guidance that we are offering them.
And that brings us to the conclusion of the topic. Thank you so much for your time, Srikrishna. It's been a delight speaking to you as always.
Likewise, Supriya. Enjoyed chatting with you. Thank you so much.
You've been listening to Capital Call with Srikrishna Ramamoorthy from Unitus Ventures. Stay tuned for the next episode at techcircle.in. Until next time.